Concerning the rules of investing, Warren Buffett once said, rule number 1, don't lose money. Rule number 2, don't forget rule number 1. If Warren Buffett were to make $1 every time we quoted him or applied his wisdom on wealth building or what assets to invest in and many more things, this would be a huge source of passive income for him. Hi investors, and welcome back to our channel. And today we're going to be tapping into the wisdom of one of the greatest investors of all time, Warren Buffett. We're going to be looking at why it's necessary for you to avoid keeping cash and allowing cash to work for you in the form of assets investment. The idea behind most people when they think about building wealth is just getting a lot of money. However, according to Buffett, there is more to increasing your wealth than simply acquiring money alone. Your net worth is not just about how much cash you have, it's about the assets you own. Simply put, how much owner's equity you possess. Differentiating cash from assets lies in the nature and value. Cash is an asset characterized by high liquidity, including short-term investments and cash equivalents, which can be utilized without many hindrances in trading activities. Conversely, assets are a wider range of properties, from those such as real estate and equipment that one can touch to the ones like goodwill or intellectual properties. However, it is important to note that cash is not everything. It helps to have money on hand because it may give you a sense of security and also indicate to others about your financial situation. However, relying entirely on cash does not make one rich. To illustrate, if you have too much money just lying around, then you might be doing more harm than good when it comes down to your long-term financial goals. Thus, finding the right balance between having some cash for urgent needs and investing in assets that can be appreciated over time is crucial for achieving long-term financial prosperity. So which is better, cash or assets? Looking at these options from the lens of Warren Buffett and through the lens of the economy, it is safe to say assets are better than cash. Assets can grow and earn an income, while cash usually tends to be stationary, losing its value mostly due to inflation. Money is not supposed to be saved, but instead used as a tool for financial progress. Imagine this situation. If you have $10,000 sitting in your bank earning little or no interest, it may struggle to keep up with inflation rates. However, investing with the same amount of money into an asset that gives you only 4% return could enable you to get an extra $400 a year. This gap widens with time and shows how valuable assets are in protecting and growing wealth. Asset portfolios and asset investments are often believed to mean buying stocks whenever they are mentioned. It is, however, important to note that even though stocks play an important part in any diversified portfolio, there are many other assets one can consider according to Warren Buffett. Buffett's philosophy is all about investment in intrinsic value and long-term growth investments. However, this approach by Buffett goes beyond simply investing in the stock market. He famously said, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. One must create resilient asset portfolios through diversification. Spreading investments over different asset classes helps reduce risk and minimizes returns over time. So, what are some of those assets that Warren Buffett considers to be better than cash? Are you ready to optimize your financial strategy with Warren Buffett's top 15 asset picks? Then you are watching the right video. But before we continue, don't forget to like, subscribe, and share this video with a friend for more valuable financial knowledge. Asset number 1, livestock. When it comes to Warren Buffett's asset investment philosophy, even livestock finds a place in his strategy. According to research, 2 major sectors that seem to be growing at a considerable rate are agricultural and technology. This non-conventional investment option allows investors to tap into agricultural, an industry with the potential to hedge economic fluctuations as well as inflation. Animals found on farms, for instance, pigs, cows, chicken stock, also serve as physical assets where intrinsic values exist with growth potential. To do so, investors can only employ unconventional approaches like investing in the agricultural sector, which can mitigate against economic volatility while providing a hedge against inflation. Furthermore, such investments ensure a tangible connection to the real economy since They are required in food production as well as consumption. For every investor who takes part in these industries, not only do they position their risk, but support those sectors that feed human beings and provide jobs at a global scale. These livestock investments are stable and have long-term growth prospects that meet the requirement of Buffett's search for holdable value, embodied, tangible assets, thus making them quite attractive for any person looking forward to expanding their investment horizons. Asset 2, land. Land is a timeless asset that stands the test of time and offers an opportunity for legacy better than any other. Rather than just living in the moment, investing in land lays the foundation of wealth, which will secure prosperity for many generations to come. The value that land holds over time makes it an important aspect of wealth creation, stability, and appreciation potential over a long period. Investing in land can thus enrich your asset portfolio by farmland growing crops or commercial property with economic activity. The third asset is mutual funds. Mutual funds are investment strategies where investors pool their money together to buy a group of stocks, bonds, or other securities. A mutual fund's price is calculated by dividing the aggregate value of all securities in the portfolio by the number of outstanding shares and referred to as a net asset value, or NAV. Professionally managed, these funds avail exposure to various assets, thereby ensuring stability as well as growth possibilities. Asset number 4, raw materials. It can be a great idea to invest in raw materials as part of your portfolio diversification and risk management strategy. This material has some characteristics which makes it a good choice for investors. For instance, inflation will lead to higher prices of those materials, thereby protecting investments against the increase in the cost of living through their inflation buffering capabilities. Raw materials are not affected by an economic meltdown or upturn that can see stocks losing value completely from their shares. Also note that supply and demand forces significantly affected the market value for raw materials, making it important to add this type of asset when diversifying an investment portfolio to insulate it from economic uncertainty and inflation while still being able to make significant returns. Asset number 5, real estate. To anybody who knows a thing or two about owning assets, real estate is something you come across at every angle. You cannot miss adding real estate to your asset investment portfolio today. Buffett agrees that investing in housing property is one of the ways of creating wealth over time rather than just consuming earnings just like other people do. Being either residential or commercial, real estate provides consistent income streams with potential gains over the years. Asset 6, vintage cars. While most cars depreciate, certain vintage ones appreciate with time. That is to say, business people can gain a lot from buying old cars and have a historical touch or were produced in a few numbers. And at number 7, value stock. Value investing involves seeking out stocks that the market has undervalued and which therefore have long-term growth potential, aiming to build a durable portfolio by holding fundamentally sound stocks that are not greatly overpriced. This strategy focuses on purchasing equities trading below their intrinsic values. Buffett urged investors to look for firms with strong fundamentals and competitive advantages. By analyzing fundamental metrics like expected future earnings, balance sheet health, and cash flow, investors identified value stocks that are priced below their intrinsic value. As shocking as this might sound, asset number 8 is designer luxury bags. And they are an amazing asset. For instance, fashionable designer purses from well-known designers such as Chanel, Louis Vuitton, and Hermes have a great resale value and are always in fashion, so they can be an excellent investment that may serve as valuable assets for many years. Some high-end designer purses can be considered investments because their value goes up over time. These bags are made of rare materials and have special designs that make them popular among fashion-savvy people and collectors. Asset number 9, commodities, which offer a diversification from precious metals like gold and silver to crops such as wheat and soybeans, as well as inflation protection. Commodity investment may be employed effectively in hedging against market volatility or fluctuations in currency rates. Asset number 10, just like classic cars or expensive handbags, luxury watches are valuable assets that increase in worth over time. Limited production and excellent craftsmanship make these watches highly sought after by collectors from all over the world and investors alike. Asset number 11, fine art. Buying fine art might sound like ostentation, but it can be a profitable undertaking for wise investors. With the potential of high yields alongside diversifying portfolios, it is reasonable to think that fine art as an exotic group of assets. Asset number 12, platinum. Now, because platinum is one of the precious metals, it means stability and long-term value. Given its rarity and industrial uses, platinum can be used as a safeguard against inflation and currency devaluation. And along those lines, it brings us to asset number 13, silver. In addition to being used in jewelry, silver has several industrial applications that make it important. Investing in silver provides portfolio diversification and, again, safeguards against inflation. And let's continue on down this path and talk about asset number 14, gold. Generally considered the ultimate store of value, gold has been cherished by societies for ages, having intrinsic value and limited supply. Gold acts as an insurance against economic uncertainties as well as the devaluation of money. And finally, number 15 is the asset of yourself. Investing in yourself is the ultimate foundation for financial success, allowing time for self-improvement and another important step before considering any asset classes. In this regard, some of the things one can do include soul-searching about what you love most about life, always improving yourself by learning, and constantly having a growing mindset that sees problems as opportunities for personal growth. This way, you will not only increase your abilities, but also maximize your potential for long-term financial achievement through growth. So folks, there it is, Warren Buffett's top 15 assets that are better than cash. Which of these investment channels did you find inspiring and ready to start with? Let us know in the comment section below, and happy investing, and I'll see you in the next video.